Recently, I've had some joy, some profits from selling the Australian dollar, but then I would suggest most people have had a fair bit of success from selling the Australian dollar. In particular, I had a trade on selling the Australian dollar against the Swiss franc. It's not something that I particularly trade, but my whole trading philosophy is about buying strength, selling weakness, looking for a pullback, and then using price action to enter. That's my whole philosophy. This would have been, crikey, it must have been about 6 to 8 weeks ago. I started to notice that the Aussie dollar was starting to weaken across the board against all of the currencies, against the euro, sterling, US dollar, Japanese yen, etc. And then we had, here's a sort of a way about technical and fundamentals coming together. Was that then we also had, some news out of China that that their economy was slowing. Australia is closely linked to what's going on with the Chinese economy through the commodities market. Then the Australian government sort of reduced their interest rates, and so basically this sort of just all of these elements came together to sort of create a little bit of a perfect storm, and so effectively the world and his wife was selling the Australian dollar, and I was one of those, and effectively buy strength, sell weakness. There was a pullback. It provided me with a price action entry, and I entered the trade, and then I just ran that trade. Very, very simple. Normally, as an ex-military man, I like to hit a target, but as what I'm sort of building this year is a kind of way to let my trades run for much further and much longer. And so I just utilised a simple trailing stop loss strategy. The once I was in the position that every day, sort of the end of each day or the start of each morning, depending on where I was, it took me about 5-10 minutes to work out where the trailing stop should be, and I just moved it accordingly after as price moved down. So the trade ran for about 26 trading days in total. So it ran for a good while. It was profitable. I think it generated 9.9 R return. Okay, so it was profitable trade, and actually very relatively stress-free, because it only took me a couple of minutes every day just to, once the trade had moved, just to basically manipulate the trailing stop loss and then let the market take me out when it was ready. Did I expect that trade to go so far? No, not really. No, I expected to get stopped out much further than much sooner than actually happened, and I think that's part of markets that my experience has been is that they tend to undershoot and overshoot. They don't always turn on the sixpence that we think they would do. Okay, so actually the market it ran, and I expected to be taken out at a few levels. But let's say the kind of weight of bearishness about the Australian dollar was just such that it just crashed through all its support levels, and it just kept going. It kept going much further in terms of time and also in distance than I expected to, and that's, I suppose that's one of the things of you learn as a trader, is that trying to pick the exact sort of tops and bottoms or the exact turning points. Human beings, human traders, we love to do it. We love to be able to say, I call the top in that or the bottom in that. But the truth is, for the vast majority of the time, you don't really know. And I long ago gave up trying to pinpoint exact turning points in the markets, exact highs and bottoms. Just take the trade, let the trade run. Okay, just move my stop loss so it's trailing behind it, so it becomes more of a stop profit than a stop loss after a while, and just let the trade run. And it's in many ways it's more relaxing, because I have no idea when the trade will turn, and I've given up the need to be right, the need to call it. Okay, I really don't care. I really don't bother. Just the trade's on, the trade runs, and when I'm out, I'm out. And once that's done, just make sure I keep good notes about it. Make sure I review it, see what I can learn from it, see what I could improve, in my trading performance, and then just it's one of thousands of trades. So it's just move on to the next setup. That's as simple as that, really. One thing I would say, and one thing I would, it kind of recommend to new traders is one of the things we talked about is, about emotional health and about that emotional capital. Okay, and what you find is that I'd like to think, and people who have traded with me or sat with me have said, when they speak to me or when they work with me, that they have no idea whether my trade is up for the day or whether my trade is down for the day. Okay, in terms of my attitude, it's, as I said, it's just one of thousands of trades. Okay, it doesn't, it doesn't. I don't get overly excited when I have a good trade. I don't get despondent when I have a bad trade. It's just a trade. It's just one of thousands of trades. Okay, and what you very often find with kind of like newbie traders is that they kind of almost like link their self-esteem to their trades and to their kind of profit and loss of their trading account. Okay, so when the trading account is up, they're up. When the trading account is down, they're down as well, and then they just find themselves on this emotional roller coaster. Okay, and that's just not a good place to be. That there's just that's not helping you as a person or as a trader. It's you need to just get off that emotional roller coaster. It's a trade says nothing about you as a person. It says nothing about your self-worth as an individual, unless you kind of give it that kind of unless you kind of project that kind of meaning and interpretation onto it. It's just one of thousands of trades. So you'll have losing trades, you'll have winning trades. Your job as a trader is to manage risk and take small losses. That's your job. Just to manage risk and take small losses, and that's it. That job done.